Hello and welcome. You're with World Business Report. I'm Sally Bundock. Here are the headlines. One fiscal cliff avoided. Watch out for the next as Washington prepares to do battle over America's $16 trillion debt ceiling.
I'm Rico Hizon in Singapore, and more evidence of a rebound in China's economy, with numbers confirming a strong December for the services sector.
Plus, don't repeat our mistakes of the 1930s. US billionaire Steve Forbes tells Europe's leaders why austerity is not the way forward. Good to have you with us. So US stock markets started 2013 with their best day in more than a year, thanks to a budget deal reached by US politicians late on Tuesday. The deal heads off $600 billion worth of tax rises and spending cuts, that so-called fiscal cliff that economists warned could push the US economy into recession. But the market euphoria is proving to be short-lived. The deal, already criticised by the IMF, merely delays $100 billion of government spending cuts until March the 1st. And around the same time, the US will reach its borrowing limit of some $16.4 trillion. The debt ceiling can only be raised after agreement in Congress, which means the US could be on the brink of another cliff in a matter of weeks. Here's Michelle Fleury at the New York Stock Exchange.
Here at the New York Stock Exchange, the first day of trading got off to a very cheery start as American investors celebrated that fiscal cliff deal. But the drama doesn't end here, because in just 8 weeks, American lawmakers must once again try to tackle two fiscal-related issues. One is the debt ceiling, the other is automatic spending cuts. Now, the deal reached over the new year dealt with the tax side of things, but it didn't deal with automatic spending cuts. That's something lawmakers will have to face each other around the table again come March. The other issue is the debt ceiling. US Treasury must get Congress's approval to borrow more money so it can continue to pay its debts. President Obama says that he doesn't want the debt ceiling to become a point of negotiation, but Republicans are already indicated that they may only give approval for an increase to the debt ceiling if they get more spending cuts and entitlement reform. All of this sets the stage for a test of the new Congress and also a test for the confidence of the financial markets.
Well, for more, I'm joined by independent financial analyst Louise Cooper. Nice to see you, Louise. Happy New Year. Yes. And we're all rather relieved, aren't we, that they did get a deal in the end. But of course, we're looking ahead. Markets always look ahead to the next big thing, and that's not that far away, is it?
Exactly. I would describe the very big rally we saw as a relief rally rather than sustained euphoria. Remember, the stock markets didn't really fall on fear of a no deal. Therefore, one wonders if they will rally on a mini deal, sustainably rally, more than just a one-day rally, and I would suggest that's probably not the case.
Well, right now in Asia it's all pretty flat, to be honest. We've not seen a significant fall, but it is fairly flat following Asia's big rise yesterday.
There is one thing that's interesting, is that the fear index, the volatility in the American stock market has fallen quite dramatically over the last few trading sessions. Now, that is quite significant because high volatility means there's a lot of fear. Low volatility means investors are feeling a little bit more confident. So that is something to watch out as we get back into the new year, as the trading volumes increase, as people return to their desks. That is something to look out for.
Now, in terms of what's ahead, obviously they will have to discuss the debt ceiling. You know, the credit card is maxed out in the United States now pretty much. So they have to come to a political agreement on that. And that will mean spending cuts, won't it? Probably.
It does seem that the Republicans feel they have had to compromise for this mini deal, and they will be looking for paybacks in the next deal. So that's the political dimension. Interestingly, it seems that investors are, I think are just starting to get bored with the whole crisis, a bit like what happened here in Europe. They just got bored of the Eurozone crisis. Maybe they're just getting a little bit bored of the fiscal crisis in the States and are willing to just ignore it. The assumption being some kind of deal will be done. The politicians are not going to commit economic suicide. And so because of QE, low interest rates, investors are forced into equities. Maybe they're just going to ignore it.
All right, Louise, we'll talk some more about this in about 10 minutes. Louise will return because she's going to look at today's papers. And I'm sure you're well aware, it's all over the press, this fiscal cliff drama. It won't leave us anytime soon, so we will talk some more then. But let's now focus on China because we've got more evidence today to show that the economy there is rebounding quite significantly. Figures confirming a strong month for the service sector. Let's go to Rico who's at our Asia Business Hub in Singapore. Happy New Year, Rico. Nice to see you.
Sally.
Now,
Happy
just
New
to
Year,
say,
Sally.
Rico, we had good news for the manufacturing sector. Factories in China picking up speed in December.
Yes.
This is the service sector now. So it's, you know, a picture that's seemingly across the economy. Is that what people are saying?
That's right. It seems like we're seeing an improvement on both sides of the economy for manufacturing and non-manufacturing. That's why we're seeing the Purchasing Managers Index for the services sector rising to a 4-month high, Sally, of 56.1 in the month of December from 55.6 in November. A reading above 50, Sally, indicates growth is accelerating, while a number below 50 is an indication of a slowdown. The fast-growing services industry has so far weathered the global slowdown much better than the factory sector in 2012. And analysts say domestic demand will be a major stimulus for the mainland's economic growth going forward, and the greatest potential will be coming from the services industry. And one of the key drivers, Sally, for this jump is construction services, which supports about 40 other industries. And the signs of strength come despite government restrictions on credit and purchases. And this positive data, as you mentioned, combined with improving manufacturing data, shows a revival in the world's second largest economy. Sally.
Thank you very much, Rico. Let's look at Europe now, because the crisis in the Eurozone has been relatively calm in recent months, thanks to the European Central Bank pledging to buy the debts of struggling governments. Now, that's bought those governments some time to get on with their reform efforts, but are they going about it the right way? Definitely not, says influential US publisher Steve Forbes. He told the BBC's Andrew Walker that European politicians are repeating some of the mistakes the US made in the 1930s.
They should realize that what they're doing now in terms of these southern European countries, and the Germans are guilty as anyone, is this private sector austerity. You have not had in these countries much what you might call internal restructuring. Monti tried it in Italy, didn't get very far, and the Germans haven't put much pressure for it.
When you talk about restructuring, you're talking about reforms intended to free up the labour market and
yes,
that kind of thing.
And make it easy to start a legal business, especially if you're an outsider in Italy. Try to do it. Very, very difficult.
Have you tried?
We've done some business in Italy, and it ain't easy. But most importantly, which should be easy, in addition to selling government assets, easy way to raise cash without cutting budgets, is reducing the tax burden instead of piling it on. Spain has raised their top tax rate to 52%. They're raising their VAT to 21%. The Italians are raising the VAT. Greece is raising everything and collecting nothing as they have businesses flee to neighboring Bulgaria. So realize that's not the way to go. Go in the opposite direction, and those economies start to revive, which is the only way they're ever going to be able to service their debts.
The implication of that is surely even more savage cuts in public spending programs than they are already contemplating, which are giving them enough political problems as it is.
Actually, the only way you preserve those programs is when you have a vibrant economy. And so in terms of balancing a budget, what they're trying to do now is the way they tried to balance budgets in the early 1930s, which was piling on taxes, which meant you had a contracting economy, which meant your revenues were always disappointing. Greece is perpetually about to run out of cash. Spain is not meeting revenue projections. So learn, this is not working. Try something else. The only way you can do it is if you start to get a vibrant economy, revenues grow. And boy, that solves a lot of problems.
With Europe struggling and the United States still pretty sluggish, is China the saviour for the world economy?
China, I think, is going to do a little better this year than it did in 2012, but in terms of being an engine for the global economy, not enough to pull us out of the morass that we're in. We've got to do it internally. We can't count on others to come to our rescue.
Perspective there from Steve Forbes. Let's squeeze in one more interesting story in business. Al Jazeera is saying it's buying Current TV, the struggling US cable channel co-founded by Clinton's former Vice President Al Gore. The Qatar-based news network says the deal will give it access to more than 40 million American households, compared to less than 5 million at the moment, putting it in closer competition with US news channels such as CNN and Fox. Markets today, Japan and China is still closed for New Year holidays. As you can see, fairly flat to mixed picture emerging. This was the close in the States yesterday. If you did miss it, look at those percentage increases due to the deal on the fiscal cliff. And those are the currencies. I'll see you soon for a look at the papers.
Now more of the main UK news. The family of a Briton killed in a bar in